Good morning. This is Connor from 0DTE Traders here to present our market minute for January 11th, 2024. It is 11:10 and the SPX is trading lower, down 0.6% to 47.55 on the back of a hotter than expected headline CPI print, actual 0.9, forecast 3.8. Core month over month did come in line with expectations, actual 0.3, forecast 0.3. So definitely bearish. Now, if we look at the initial response, it was a flush down in the SPX. Although, surprisingly, much like the NFP scenario, volatility got sold, right? So we didn't see that spike, which gave us an indication to actually buy the dip. So we bought the dip here this morning, knowing that the CPI did come in a little bit hot. So we weren't as patient as we were when trading the NFP. So we're booking profits into strength, and we actually flip our exposure essentially right at the open. And I just want to highlight the setup here because this is what we call a high probability setup. Now, clearly counter trend. And ideally, we recommend to be a little bit cautious when trading counter trend. But when we see confluence, as we saw today, it tends to be a pretty high probability counter trend setup. So first off, we have the 2023 high at 47.93. We got the major call wall at 4,800. This has been a significant level for weeks now, and we can see how dominant this call gamma is. So this is looking at SPX notional gamma. The larger the bar, the more significant the level. And we can see how dominant that 4,800 handle. Additionally, if we looked at 0DTE options volume, I have it here somewhere. 4,800 was the max call strike, which we deem as the upper bound, right? And is generally a good indication of where the market may pivot. So we had several levels lining up. In addition, we were overbought, and there's no reason to break such significant levels here based on the economic data. Now, I usually say don't focus a whole lot on the economic data because the market doesn't always align with the economic releases on an intraday basis. Now, of course, that gets priced in over time. So we're more focused on the market reaction function. However, we're at some very critical levels, and we're at a point where there's no exacerbating factors, right? Vol is compressed to the lower bound. So if vol compresses, it's not going to invoke buy flows. We are at peak gamma, given we're trading at the call wall. So dealers are fully hedged. There's not going to be forced buying. So at this point, every exacerbating factor points to the downside. So in order to really break above these key levels, there needs to be a reason to go long, whether it's positioning via out-of-the-money calls or just straight equity. A hotter PPI print is not that catalyst that's going to spark bullish positioning. So we thought it was a no-brainer to go short, and well, clearly that's playing out for us here. Now, we're breaking some key levels, notably our flip at 47.65. That is our transitional strike. We're also breaking our secondary transitional strike at 47.45, very bearish, with the implied low at 47.35. So perhaps we'll see a bit of a bounce here, but given the conditions and the exacerbating factors on the downside, we're recommending to be maybe a little bit tactical if buying the dip. Now, if you want to actually learn these underlying dynamics, the concepts that I'm speaking about here, you want to trade with us, you can visit our website at 0DTEtraders.com. Become a member, get access to our Discord, our options course, and trade daily with us. And this market minute is simply just a quick overview that I do when I have time. But we break this stuff down in real time, live stream. You see my chart, you hear my voice, exactly what we're doing now, but in the moment. And we were taking these trades in our live stream here today. So again, if you want to be a member, visit our website at 0DTEtraders.com. Best of luck out there today.